Please welcome the SVP of Revenue for Sonder, Shruti Challa, in conversation with Skift Senior Research Analyst, Seth Borko.
Hello, everybody. How you all doing? Thank you for joining us. And Shruti, thank you so much for being here with us today. We have a very exciting session. We're going to be talking with Sonder. Shruti, thanks for joining us.
Thank you for having me.
So I guess I want to start a little bit about yourself. Your title is SVP of Revenue, but you were just telling me that your job's a lot more than just revenue, isn't it?
Yeah, it is. So revenue is a bit of a miscategorization around what I do. I lead brand. I lead the way that we drive customers to find Sonder, things like sales and marketing and distribution channels. I also lead how we optimize that demand, so revenue management and data science. And all of the fun and sexy stuff with ancillary revenue and thinking about new ways to build a great guest experience for the guests, but monetize them. So anything from brand to data science, it's kind of like everything there.
Well, we're gonna spend 23 minutes on ancillaries, right?
Sure, whatever you want.
Right, just kidding. All right, well let's just. I think many of us know what Sonder is, but I even though we say that, I don't know if I really know what Sonder is. To be honest with you, are you guys a hotel company? You a short-term rental company? You a tech company? What's Sonder?
We're all of the above. We really believe that we are the future of lodging, which is the name of this conference. And our goal is to build a global hospitality brand, leveraging design and technology to build the hospitality company of the future, and making stays accessible to all. A few quick stats about the business. We're in 39 markets. We have around 8,000 rooms, 250 properties. And we're just really excited about what the future holds.
So you got your start. I like, one of the big themes for this conference has been like this great merging, how we're a lodging industry, we're a accommodation industry. But to use some of those old-fashioned terms, you did get your start in the short-term rental space. You've been adding hotels onto the platform. So that's an interesting merger happening there. What's going on with that? Has it been successful? People like it?
Yeah, I think so. I mean, again, at our core, our belief is that we can transform hospitality by some core principles around design and technology. And the traveler of the future has many different desires in terms of how they travel. They might want to stay for long. They might want to be with family. They might want to stay for a short business trip. And we want to build product and guest experience that really reaches all of their needs. And so whether it's hotels or STR, we want to get into it all. It's interesting, though, because I do think that there's a bit of a false dichotomy there. And I think that we see people staying at our studio apartments for 2 days, and they just care about a healthy lifestyle, and they want to, not wash their laundry 2 days, probably they won't wash their laundry, but they care about eating healthy food and cooking at home. But then we see people, for example, we entertain a lot of entertainment groups, sports teams, a lot of Broadway shows actually, and they stay at our hotels for 2 to 3 weeks on end. And so I think that the key here is to build experiences and product that really matches the needs of your customer segment. So even in our hotel product, we think about desks and we think about plugs and we think about how are you going to live and light, how are you going to actually live in the space, because we see people staying for long and we see people staying for short.
So you mentioned I like that, the guest of the future.
Yeah.
We got to hear about the guest of the future. Is it literally the guest of the future in terms of Gen Z, or is it a mindset change amongst kind of a more mature audience?
Yeah, so when we think about our customer segment and parlaying that into the guest of the future, it is someone that is definitely young. It is someone that is urban, but they're also personality traits. They're open, they're thoughtful, they take agency on their life, and they want to kind of self-curate their stay. They're more digitally enabled, and I think that the pandemic accelerated that for other demographics as well, but technology really underpins a lot of the desire of the generation that we believe is going to travel and use our product. The other aspect is, and we all know some, I don't know if we have any Gen Zers here, we don't, we're all older, but the Gen Zers of the future, Gen Z care and millennials care a lot about design, and they care a lot about how they appear to their communities. This is an age where social is, a way of life, and so design is actually a huge part of how we think about building product. I often compare us to fashion brands like Zara or Everlane because they've really commoditized what good looks like, and I think this generation cares about those qualities.
Does that generation have the, I guess, traditionally I would say when I think of a design-led place, I think of also of a high-priced hotel.
Yeah.
So there's usually often a mix, Gen Z, even some millennials earlier on in their career, not so much for millennials, but Gen Z earlier on in their career, even still in college, not a lot of purchasing power. Design, typically an expensive thing. In fact, I think you guys comp yourselves against upper upscale. Does that create a mismatch there, or?
No, I mean, I think it's hard to actually figure out what our competitor is in this landscape. In terms of pricing, we're actually priced a lot cheaper than upper upscales, but we drive a lot of occupancy, and that's how we're able to get RevPARs that are higher than upper upscale in terms of kind of RGI, which is the common metric in the industry. But design doesn't have to be expensive. Design, if you look at brands like IKEA or Zara, it is about taking really good design and curating it for the masses. And we found that good design doesn't have to be expensive, whether it's digital or physical. I also think that technology creates a lot of operating efficiencies, and so we get a lot of cost savings from that as well.
All right. So the acronym RevPar just got dropped in the conversation.
Yeah.
I do want to revenue per available room. I think we all know that in this room, but let's make sure. Let's talk about that. Sonder reported earnings last night. Francis said we're going to get to like 147 RevPar. You're not there today.
Yeah.
You're in charge of making that happen.
Yes.
You feel good about it? You're going to hit it?
I do. I think that there's two big drivers that are going to drive RevPAR this year. The first is the recovery. There's supposed to be an increase in 39% in terms of upper upscale in terms of a comp set, just to use as a comparison. But also, we've been outperforming the market. In fact, in Q1, we were only down 15% year on year, whereas the entire market was down more than 30%. And so when I say year on year, compared to 2019, pre-pandemic. And so I think that there's a lot of tailwinds in just basic recovery. But there's a lot of initiatives that we're investing in as well, from better guest experience to tactical revenue strategies, from pricing and getting bookings earlier in the booking flow, earlier in the life cycle, to attracting new segments of demand. We're really targeting digital nomads through marketing and merchandising, and we're attracting corporate travel, which is actually coming back right now that we never had before, to new ancillary ways. So we launched early check-in and late checkout and upgrades, and starting to explore new ancillary services as well. So feel very confident about the RevPAR story, which is pretty critical to understanding our path to profitability. Because you have to believe in a clearing RevPAR to get good unit economics, but you also have to believe in growth as well to cover the fixed cost.
That's a lot. That was a great answer. Thank you for that, Shruti. There's a lot to unpack there. That's the whole rest of the conversation. We'll unpack that. I want to talk maybe a bit about, if you don't mind, going back some of your pricing tactics, though. I think. Again, Francis said that you guys, shifted your pricing strategy to try and drive occupancy. Is that just like a fancy way of saying that you guys were cutting prices, or is there some other way that you have of driving demand other than just the pricing tool?
Yeah, I mean, no, there's a lot of ways that you have to drive demand. Pricing is kind of at the end once you bring everyone to the auction, right? And so first and foremost, you have to build a brand that people love and identify and can comprehend. Then you have to tell that brand to your customer segments. And so that can be corporate travelers, that could be leisure travelers, that could be digital nomad, that could be bleisures. And then only can you decide and make pricing and revenue management decisions. That said, we have innovated a lot, and I think that that's one of the areas, our revenue management software and the data science behind it has been really robust, and we've actually approached the problem from first principles. And so without getting into the hardcore math of it, I think there's been 3 innovations.
Yeah.
The first is that we did a lot of elasticity studies, and elasticity is effectively the trade-off between occupancy and ADR. And we found that even with just a small markdown in price, I'm not talking 10, 20%, I'm talking percentage points, you can actually drive occupancy quite more effectively. So that trade-off is 1 to 3 effectively, which is very high. The second thing is that once you can do that, what you can do if you have higher occupancy and you have terminal occupancy is you can start getting bookings earlier in the DBA window. DBA is days before arrival. And so instead of booking people 60 days before, there's travelers out there that want to book 90 days before. Now, you probably will follow up with saying, okay, well, high occupancy equals high checkout costs, and there's higher variable costs. And that's true. There are higher variable costs. And granted, we're getting 1/3 in terms of occupancy, 2/3 in ADR. I'm getting quite technical here.
No.
1/3 in occupancy, 2/3 in ADR, but we're getting it at longer lengths of stay. And so we innovated on a full pattern length of stay pricing algorithm, which is a huge innovation for us in terms of being able to price a 30-night stay and a 1-night stay in a contribution optimal way.
So thank you for that, Shruti. I want to just kind of pause on that for a second, maybe translate a little bit, because I think that was important. We got a little technical there, but I think it's a big deal that you're driving length of stays. I think we often just hand wave that word revenue management. We just say, oh, we revenue managed it. And it's like, what does it really mean? What are the decisions, and how do you think smart about it? So thank you for sharing that with us. I appreciate it. One of the things we want to talk about, you're using that word contribution, is about profitability, about cash flow. I hate to bring it up, but Sonder reported earnings last night, and the stock market reaction today and in the past 3 months hasn't been positive. And I think it very much has to do with your ability to generate not just revenue and RevPar, but cash. So how do you think about that when you're driving these things? Do you feel good about your path to profitability?
Yeah. So I'll answer that in 2 parts. I think first is to understand that there is some crazy stuff happening in the market right now. Most tech companies are down more than 50 to 60%. And I think that's because there was probably some pump up in terms of overvaluations. But I don't know if these are the fair prices of any of these businesses. I got my Yahoo Finance alerts or Robinhood alerts today. It was like, everything's on a 52-week low. I don't look at my portfolio because there's just something. Everything is kind of not trading on fundamentals. There's just trading more from a technical perspective.
But there still is a fundamental question about cash flow.
And that's what I'll answer. Second is that ultimately businesses need to be evaluated not just by the sexiness of their technology or their guest experience or their brand, it's their free cash flow and their profitability margins. And so for us, we're making steady improvement. And so Q1, we saw improvement on all key margin indicators or profitability indicators. And for us at Sonder, free cash flow is a rally cry. It's everything that we're focused on. And there's 2 things you have to believe that we'll get to profitability. And I kind of mentioned that. I led the, I got ahead of that. I think first you have to believe in the unit economics story. And that has to really do with driving revenue per available room and really getting more demand at good prices. If you believe in that, that will flow through to profitability and better unit economics. And honestly, we were really impaired on RevPar over the last 2 years. In 2019, we were doing 145 RevPar, and this year I believe that we'll do more.
Can I just, for the audience to say, where do you stand on the unit economics today? When you forget your backlog of supply and forget some of your overhead, when you sell a room, are you making a profit on it?
I can't speak to that yet, but I really believe we're on the path to making 20 to 30% in terms of contribution from a unit economics perspective. And you have to believe that to believe in our business. And that all comes from the demand. Can you get customers at a good price in your units? The second thing you have to believe, though, is growth. And growth is effectively, how many hotels do we have? How many STRs do we have? What other asset classes are we getting into? And that's important because unit economics, when you have high overhead or high fixed costs, and there's a lot of R&D that we're investing in, doesn't really matter if you don't have system size.
Yeah.
So you need scale as well. So these are the two kind of drivers, RevPAR and growth, to get.
And because you're putting so much into your tech, you're putting so much into opening your properties and into your operational costs. As you grow your scale, and you have, I think, like some huge amount, several thousand new units coming online in the next couple of years,
I would say a lot of it is more into our technology. Our opening costs, our acquisition costs are actually.
It's not. So it's not that.
It's not. Those aren't the biggest drivers.
Can I ask you a question? I guess we're on the sort of topic of the economy, but like you deal a lot with landlords. You sign multi-year leases. You lease up whole buildings, or you have the hotel business now. But in your short-term rental business, you lease up whole floors or buildings. Rents are rising. Is that going to impact your cost, or is it even going to tell a landlord's going to say, actually, I'd rather rent this out in the apartment market? Does that matter?
Yeah, no, it's a good question. So first thing is just to clarify a bit about the brand. We actually are primarily in full buildings now. So both multifamily and our hotels are full buildings. We just have maybe a few onesie twosies here, but we're really looking more like a hospitality brand than anything. In terms of rising rents, we haven't seen a material impact in terms of our ability to negotiate on the supply side. And generally, when you're entering, and I don't want to drop this word, but if you're entering a potential recession, your actual ability to negotiate with landlords and hotel owners and developers improve. That said, demand has been, at record levels as well. And I believe in terms of if there's any increase in rent, it'll get offset by demand.
By demand. And so this demand equation, Q2, looking good? You happy the demand looks good?
Yeah, it's looking good. All the leading indicators are suggesting that there is a snapback in travel, and I think it's a combination of everyone wants to just get out and have fun, but also there's a lot of initiatives, and we're not the company we were pre-pandemic. We've unlocked a lot of new customer segments, from extended stay and digital nomads to corporate travel, and so Q2 we're expecting a 140% year-on-year growth.
It's a big number.
Yeah.
It's a big number. If I just push you on a little bit, Q3, Q4, a lot of people are saying the summer looks really, really good, and we know that.
Yeah.
Do you think the consumer is going to feel good in 8 months from now?
I don't have a crystal ball. Otherwise, I would, be a hedge fund manager and make a lot more money.
You and I both. Huh?
Exactly. But I'm optimistic, and I'm optimistic mostly in just Sonder's ability to pivot and shift if something else gets thrown at us.
So speaking of a shift, corporate travel.
Yeah.
Whole new market for you guys. You're entering in a big way. And you have some past experience in that. Tell us about Sonder's move into the corporate travel space.
Yeah. So, at our core, we're really trying to still target the same customer segment, just for different travel needs.
Got it.
And I think that that's really important, because we're not going to be the hospitality provider for the folks that love their Starwood points or have been in travel for 30, 40 years and are global premier on United, but we are going to be the corporate travel company for the millennial or the Gen Z player. And so we're seeing progress in many categories of corporate and business travel. Some of the lesser known categories are things like corporate housing. And so we host a lot of interns from banks. We host, folks from who are staying for, a couple months from Visa. And so there's a lot of corporate housing, and they actually, are really great guests for us if they're staying for a month or 2 months, because we don't have high variable costs, and so we're able to host them. Well, we also have a lot of groups, and I mentioned some of those before. So entertainment, those are the fun ones. Those are the ones I get to name drop and share, because they're the cool ones. But lots of Broadway shows, lots of sports teams, so lots of group travel. And then we have the typical business transient segment. So we launched on the GDS. We have a lot of travel management companies. We try to focus more on the new age ones, things like Agencia and Trip Actions, because we connect more with our consumers. And then we grew our corporate base from 100 to 250 corporate accounts. But most of those are tech companies filled with millennials and people that kind of design forward companies that really understand understand the Sonder brand. The one thing I'll share
Oh, yeah.
is that
What Broadway show's your favorite? No.
what the one thing I'll share is that we don't have a programmatic loyalty offering yet. It's something that we're thinking about developing next year or beyond, and really approaching that from first principles. But it's really interesting why this generation travels for business. One is they have to, because they're told by their employer. But the other is that they derive value from different things. And one of the best quotes I heard is from someone who was a millennial, sharing that I could stay with my cap at maybe a Holiday Inn or a higher end Holiday Inn, but I got to stay at Sonder, and I got to Instagram it and share it with my friends. And so there's a really experiential value that our corporate travelers find.
That's a very interesting point. And the experiential bit, people want to have that experiential stay while they're on a mandatory corporate trip is a very cool idea. Let's talk a bit about performance marketing. That's
let's do it.
Distribution strategy, sort of stuff. You guys traditionally didn't really do it, but I think in the last year or so, you've really started to step into it. How's it paying off for you? And what channels are you using? Is it OTAs? Is it Google? Is it something else? What are you looking at? Instagram?
Yeah, it's all of the above. We have a very omni-channel approach to distribution, whether it's sales, whether it's third-party distribution, things like Airbnb and Booking.com, to things like Meta, which is a performance marketing channel, things like Google Hotel Ads, to TripAdvisor, to Kayak, to typical performance marketing, things like SEM and SEO. Social is very big for us. And our overall approach is to target the right customer in the right space at the right cost. And so we put a lot of data around, what is our cost per acquisition of a first-time user? And then what is their customer lifetime value after that? And what we found with performance marketing is that, we can drive really great customers to our properties at very reasonable costs, and they get to book directly. And when they book directly, they tend to be more loyal. And so performance marketing is something that we are investing in, and we're investing in it with the effort of becoming more profitable.
So, and convert. So even though it might actually be more expensive than, say, like an OTA, you like it because you can potentially own the customer.
I think it's both. First of all, performance marketing doesn't have to be more expensive than the OTAs. Okay, so OTAs generally, Joe Schmo on Airbnb will probably pay something between 14 or 15% in terms of commission. Same with Booking and Expedia. And so there are channels in performance marketing that you can get things much cheaper than that. And so both in terms of first, purchaser acquisition optimization, it can be better, but then also with loyalty, it can be better.
Okay, great. I think I have a final question for you, and we'll wrap up. I want to know, it's kind of what are like the biggest challenges that you see for Sonder, and what are you most excited about in terms of your growth story to come?
Yeah, I think in terms of the things that I'm most excited about, it comes really down to our mission. I think we have a huge vision ahead of us to transform hospitality through design and technology. When you think about technology, it's both the operating system, but the guest experience. And so that is a 5 to 10 year to 15-year hustle, man. And I'm really excited for what we're going to uncover and what we're going to introduce to the industry. I think in terms of our ability to get there, we have a good runway. The market opportunity is big. But we have to prove in terms of our financial performance. And so that's a really big priority for us in terms of 2022, expecting 110% year-on-year growth. So excited about really proving to the market and to all of you guys that Sonder is here to stay and really innovate.
Awesome. Can't wait to see it, Shruti.
Yeah.
Big job ahead of you. I can't wait to see what happens. Thank you so much for joining us.
Thank you. Thank you. Thank you, guys.